Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. As you can see, a little bit different background this week. That's because Anthony and I are both in New York for Bitcoin Investor Week. We could not be more excited. However, we still wanted to keep up our regular podcast schedule, and boy, do we have a doozy for you today. We're going to be taking a direct comparison between IREN and CleanSpark. This has been a big debate on social media recently. Which of these two Bitcoin mining giants is ultimately the better business and better business model? And that's exactly what we're going to be dissecting in today's podcast. Before we get into it, take a second, hit the like button, you guys. Feel free to subscribe to the channel and let us know in the comment section below which of these two companies you prefer and why. With that being said, let's get into today's podcast. Okay, guys, so that's right. As you saw in the intro, Anthony Power and I are both in New York. We flew in Saturday, Anthony. We've been sightseeing around the city. I'll throw up some pictures here. The Harbor Cruise, Brooklyn Bridge, Statue of Liberty. No shortage of sights and sounds in the Big Apple here. So just great to be in the heart of New York City. We're staying right beside Times Square. And of course, kicking off tonight with a dinner at Pub Key is Bitcoin Investor Week, which is why we're in New York. So Anthony, how are you feeling being in the big city?
Yeah, it's great. It's been a long time, so 17 years since I last visited the Big Apple. Brought my son back in 2007, I think 2007, 2008. So yeah, about 17 years ago. He loved it. We had a great time, and it's nice to be back.
It certainly is. Now, we're kicking off the week with a regular podcast here. We've got a couple of high-profile interviews. So Riot is coming out with earnings tonight. We've got Jason Less on the podcast tomorrow. Then Bitdeer is reporting their Q4 numbers on Tuesday. We've got Jeff LaBerge on Wednesday, and also reached out to Core Scientific. So a flurry of earnings this week and next. But in today's episode, Anthony, we wanted to kick off with two of the biggest miners, these top tier one miners, we call them, who have already reported earnings. So IREN coming out and CleanSpark, giving us an opportunity to really compare and contrast these businesses, their business strategy, and ultimately their financial results. So I know you've put together a number of tables. You were actually able to put together an article for Compass Mining that they published on Saturday. So make sure you guys go check that out as well. Some great commentary, but we're actually going to be using those same tables and charts in today's podcast.
Yeah, absolutely. And you talk about, these two miners. I've been in this space now, getting on for nearly 5 years, and I've seen the change over that period of as investors have moved from miner to miner. And go back 5 years ago, there's a lot of people interested in the likes of Hut 8, Hive Digital, and Bitfarms. They were sort of like the preemptive miners. They're the oldest public miners, in fact, the three oldest public miners. And then at the beginning of sort of 2021, we saw the likes of Marathon Digital and Riot Platforms come into the space more predominantly, the first two to join the NASDAQ and grow significantly with the opportunity to raise capital through the selling of shares on the biggest exchange in the world. And those two miners grew hash rate really, really quickly. And these last couple of years, what we've noticed is the retail investors have started to move more into the likes of CleanSpark and IREN. And we've seen that, we've had two competitions now in the last sort of 5 or 6 months, where we know the most popular miners over those two competitions have been CleanSpark and IREN. So both releasing their results in the last sort of couple of weeks, and we thought it'd be a good opportunity to highlight them both. And if you go through like the various social media, you're quite right. There's been a lot of fans of both companies trying to sort of like talk each other company up there, and then also trying to bring down the opposing company as well. So we've seen a lot of that. We've stayed away from that space there because what we deal with on our channel is we deal with the facts and the figures. And so now the results are out, the earnings are out. We can look at a whole load of metrics, understand more about the company from a sort of like from an operational perspective, from a profitability perspective, from a balance sheet strength. All these are important factors, and we do stress to the retail investors, those that watch the channel there, you don't take one metric and that's it. If we were to take the metric of how many Bitcoin mined per month, then the majority of people would all be investing in Marathon Digital because they produce the most Bitcoin. But when you lift the hood up of these companies, you have to start looking underneath that hood and seeing what else is there in terms of, are they able to mine Bitcoin in a profitable pace? And, this week we'll find out, as you say already, there's 4 or 5 big companies releasing their results this week. But today we're going to focus on IREN and CleanSpark. We've already released their numbers. We've had time to digest those. And now we can go through and talk more about what they've done over the past 12 months.
Exactly. Now, you bring up an interesting point about the social media. We've seen Rex Finance, obviously a big CleanSpark bull. He put out a video. We have the IREN bulls coming back and rebuttaling or combating those statements. So we're going to do our best here to give a balanced view of both of these companies. These are both big holdings for both of us, Anthony. And ultimately, like I say, tier one companies at the end of the day. So let's get right into it with mining metrics. You talk about opening up the hood. This is a great introductory slide to really help us understand what these companies were able to achieve in the last 12 months.
Yeah, and you take your hats off to both companies. When we look at where they were 13 months ago, they were a lot different from where they are today. I mean, CleanSpark have grown to over 40 exahashes at the end of January, 40.1 exahash. That's an increase of 298% since January 2024. And during that period, they've made a number of acquisitions and infrastructure investments, and used renewable energy sources to effectively try and get a cost-effective business model in place there. IREN, on the other hand, they've grown significantly as well, and they've grown, in terms of percentage increase of hash rate, they've gone even further at 454% increase. So they were at 6 or just under 6 exahash in January last year. They're now at 31 exahash. So these two, in terms of growth of hash rate, stand out massively compared to every other miner.
Yeah, very impressive growth over the last 12, 13 months, as you say, Anthony. Both of these companies now eyeing that 50 exahash milestone or target. It's funny thinking back 2 years ago when we started getting in this space, the companies that were trying to get to 5, 10 exahash. Now we've seen this obviously just explode alongside the global hash rate. So continuing to build on that strength we saw last year.
Yeah, absolutely. And as you say, by the end of June, both these companies will be at 50 exahash. That's their immediate target. We know IREN have sort of actually reduced their full year target. It was at 57 exahash. It's now been reduced to 52 exahash. So that will occur not too far after the end of June this year. But the reason they've brought that hash rate down is they're going to start using some of their capacity at the Childress site to develop this 75 megawatts Horizon 1 project there. So that's focusing on high performance computing and AI. And so using some of that power there, I mean, we've talked extensively on podcasts for the last, 8 or 9 months, ever since we went down to Corsicana and met the core scientific team going through their process with CoreWeave. HPC has been probably the biggest news story for the mining sector since then, and a lot of these miners now are moving into that. But with CleanSpark, they've been adamant from the start they will not be going into high performance computing. They want to remain, be the biggest and the best Bitcoin miner and focus all their energy in that area there. So they have given a target of 50 by June, and I'm sure we'll get to see a bigger target by the end of the year, because CleanSpark over the last sort of couple of years haven't stopped growing, and every few months you get another announcement with another acquisition. They bought many sites. They even bought some companies they bought like Grid and brought them onto the team there. So they've been really strong in getting hash rate. Both of these companies are very quickly catching up to Marathon Digital, and at the moment both of these companies have obviously got probably more infrastructure for their hash rate than Marathon Digital, so they're growing extensively quicker with all the latest mining machines.
Yeah, that was going to be the next number that I brought up here, Anthony. Fleet efficiency. Now, this is something we've talked about really leading into the halving event as one of the most critical factors. Cost of energy and, of course, fleet efficiency being two huge metrics or factors. Both CleanSpark and IREN have done a lot of work to improve the fleet efficiency. They're first and second in the entire sector right now, and obviously a huge capex investment for these miners as well.
Yeah, absolutely. They are the leading companies with regards to fleet efficiency. IREN have got the most efficient fleet on the market in the public miner space at 15 at the moment. And if you think about the S21 Pros, they're at about 15 terahash joules a terahash, and that really means that IREN are using the whole fleet of really efficient miners. There are miners out there that you can achieve 13.5 joules, so there is some scope to improve that for IREN. But they've effectively got a relatively new fleet over the last sort of 9-10 months. CleanSpark as well have been growing and adding to their fleets, and at the moment 16.15 joules. That's the second most efficient fleet on the market. And I believe Cypher a third on about 18.9. So there is a bit of a gap to third. It does make a massive difference in terms of cost. And we'll talk more about, those 2 points that you brought up there, the fleet efficiency and the cost of energy. When we talk about the actual cost to mine a Bitcoin, that come up a little bit later in the podcast itself.
Yeah, fleet efficiency, obviously a huge component of these miners. Now, a few other metrics on here as well, Anthony, one related to megawatts, if you want to walk through those as well.
Yeah, so this was an interesting metric to put together, looking at the megawatts of power that both of these companies have got energized at the moment. IREN have also got some of that power dedicated to their HPC business, but I've used the total amount of power available. I think we use 510 megawatts. CleanSpark, all their power is dedicated to mining, as previously explained. But it looks like at the moment, IREN are getting, effectively more Bitcoin per megawatt. So they're getting just over 1 Bitcoin per megawatt, and CleanSpark are achieving 0.72 Bitcoin per megawatt, which is still, very high in terms of the comparison with the other public miners. In terms of operations, these two are still finishing that top half of all the miners. Yes, they're not able to sort of like compete with Bitfarms and Hive Digital, but IREN were third in 2024 in terms of operational hash rate and what they're achieving, how many Bitcoin they're achieving their operational hash rate. And from a utilization perspective, this was taken over the quarterly period. So CleanSpark, although finished down lower in the table than IREN in terms of their Bitcoin per exahash, in the last quarter were able to attain a 90% utilization, whereas IREN were able to attain 88. So nothing really separating their Bitcoin per exahash or utilization during that quarter, not too big a number there. So really on par with each other, and certainly in the top half of all public miners' performance at the moment.
Yeah, I'm glad we added those in there. We're starting to see a lot of these companies diversify their revenue streams, get into HPC AI. So this is eventually going to allow us to compare revenue per megawatt as well, Anthony, and utilization, which is another factor we're starting to hear on the AI HPC side, how well they can utilize those GPUs. So a great introductory slide. The next one, as you alluded to, really gives an update on their operations. So this is something we're able to extract from those earnings reports and really compare and contrast the business strategy between these two as well.
Yeah, absolutely. These were the first two to release their earnings, and didn't disappoint whatsoever. In terms of in both achieving a net income. I mean, we've talked about Bitcoin mining companies, and we've reported literally every quarter and full year accounts when they're released. And, over the last couple of years, during that sort of bear cycle, out of those 8 quarters, if a miner was able to achieve 2 green quarters in those, that's 2 quarters where we're achieving a net profit. That was quite good. So we're now sort of into the bull cycle, and the expectation is, these public miners should be achieving a net income, and both did achieve a net income. And we'll talk through, some of the key points of their statement of operations, so their income statement, which determines their profitability. So in terms of revenues, we know, CleanSpark had higher revenues. They mined 1,945 Bitcoin compared to IREN 1,347. So if you look at the total revenues, 162.3 million for CleanSpark, and 119, just shy of 120 million for IREN. In terms of net income, though, this will be interesting to those of you that are sharp-eyed on there. So the net incomes, this is like effectively the net profit that CleanSpark achieved was 241.65 million. Now, bear in mind, I've just told you the revenues are 162.3. And some of you be scratching your heads to say, how can they have a higher profit than they achieved in revenues? Well, we'll come on to that very shortly. IREN, on the other hand, their net income was 18.9 million. And in terms of what that means per share, CleanSpark were able to achieve 85 cents per share net income compared to IREN were able to achieve 9 cents. Now, the reason that CleanSpark have had a significant net income higher than their actual revenue figure is they've benefited from what we call the Financial Accounting Standards Board, the FASB rules, which were introduced back in 2023. And they allowed Bitcoin miners who had Bitcoin and other assets to be measured at the fair value of the reporting period. So bear in mind, previously under GAAP accounting, miners could only report the lowest value of Bitcoin during the period. So they could only change the Bitcoin value if it actually dropped. So, during the bear cycle, as it was dropping, they were kept reporting that lower amount. But in terms of when there was a spike in valuation, they were never able to report the growing value of Bitcoin. Well, the FASB rules have changed now. I mean, bear in mind, this is a relatively new concept. Bitcoin's been around for 15 years, celebrated its 15-year anniversary recently. But the Bitcoin miners, the North American Bitcoin miners, have been around for just over 7 years. That's the oldest ones. We've mentioned who those three were earlier in the podcast. So the FASB have decided to get involved and to look at this asset class. And they've now allowed Bitcoin miners, by choice, to actually highlight the valuation. Now, if you think about the Bitcoin price at the end of the previous quarter, which finished on the 30th of September, Bitcoin price then I think was around about the $62,000 per coin. Now, at the end of December, it finished at literally $93,500 per coin. So there was like an over 30,000 increase in revenue per coin that those miners who held Bitcoin on the balance sheet were able to apply to their accounts in what we call an unrealized gain in valuation. So it goes in the income statement and it also goes on the balance sheet as part of their asset value on the balance sheet. But the gain between what it was valued in the previous quarter and what was valued in the current quarter, that element goes through the income statement. And this time it's a positive number and a significant positive number for CleanSpark. They were able to apply for all their Bitcoin. Some of it was held, I believe, by Coinbase, but they received a gain on both amounts of coins that were effectively their coins, part of that 10,500 Bitcoin that they have there, to the tune of about $260 million. So that 260 million put them way into profit, and their profit was $241 million for the quarter. Adjusted EBITDA, so adjusted EBITDA really is a non-accounting metric which looks at basically all the cash costs of the company. So it takes away any of the one-off charges that will apply. And just reduce it down. So it's like we talk about this, like, can a company manage within its means? Adjusted EBITDA probably takes it down to the lowest level there. Now, CleanSpark have obviously included that net gain in valuation in that adjusted EBITDA, and so when the Bitcoin price rallies, their adjusted EBITDA will be, significantly better because they can apply that gain. But if you look at today's price of Bitcoin, I think the Bitcoin price today is now dropped to 94,000. If it drops lower than 93,000 by the end of March, which is their next earnings period, then they'll have to show an unrealized loss on their Bitcoin hodl, which means that the next set of accounts that come out from CleanSpark could be a lot more challenging. So if you look at the face value of that income statement there, you'll think actually CleanSpark performs so much more better than IREN, but when you start looking into the numbers a little bit, they did have that one-off gain to help them.
Yeah, just phenomenal hearing the impacts of that FASB or FASB accounting impact to CleanSpark. But you're right, Anthony, really a double-edged sword depending on the direction or price action of Bitcoin. In my mind, that's the real X factor between these two companies. With IREN, you've obviously got cheaper access to power, slightly more efficient fleet, and the AI HPC component. With CleanSpark, though, you've got this impressive HODL that just continues to grow and grow. So that, in my mind, is really the key differentiator of these two companies and why I hold both in my portfolio. As we say, time will tell which strategy works out to be the best here. Now, the next line is about depreciation, Anthony. I mentioned in the intro, this is a very CapEx intensive business. Every few years, 4-year cycles, you're having to upgrade your entire fleet. And as a result of that, these companies are putting up big depreciation numbers. Interesting, though, to see the difference here and talk about the time frame in which these companies choose to depreciate their machines.
Yeah, and having gone through many sets of earnings figures, the miners are using different methods of depreciation, also different periods of depreciation. And so, you might see their CleanSpark have a high depreciation figure. Well, they should have a high depreciation because they've actually got a bigger hash rate. They've grown to 40 exahash as opposed to IREN's 31 exahash. So they've got 9 exahash more for a start. And bear in mind, not much more than 2 years ago, they were at 2 exahash. So they've grown phenomenally over the last few years. And, when you're buying these new machines, they don't last too long, maybe 3-4 years. So dependent on the depreciation method that CleanSpark are using, it might be that they're using also, as well as having a big fleet, using a lower year of depreciation. So therefore they take a bigger hit every quarter on depreciation. Now, another way of looking at this is this can actually, for companies that decide to go that way, this could actually improve cash flow because depreciation, although a non-cash cost, is a cash cost on the income statement, and therefore it will reduce the net income, and companies pay tax on the net income. So depreciation is a allowable cost, and so having that higher rate of depreciation over CleanSpark means that their tax bill for the period will be less than it would have been if they were probably depreciating over a longer period and therefore having a small amount. So it's from a cash flow, it could be a cash flow perspective there. But let's be honest, CleanSpark have grown hash rate in terms of physical hash rate, probably more than most of the other miners over the last couple of years. Whereas IREN's depreciation at 36.2 there, and they've got effectively a new fleet, they may be using a longer period. And so, they will end up paying, probably, more in terms of taxation in determining their element of tax on what their net income is. Not the total. You can't compare the total tax for each company because it's based on a number of factors there, but that's probably a reason why the depreciation is there. I've also put a couple of other non-cost adjustments in there. So stock-based compensation is always a big talking point along the retail investors. CleanSpark look to have reduced their stock compensation in recent periods now, 3 million applied there. And if you look at IREN, they're at 8 million. Part of that stock compensation is to provide a compensation to the senior directors of the organization should the share price reach $75. Well, looking today, the share price is under $10, so it'd have to grow, over 700% before any of those bonuses kick in there. So, mining companies do prepare stock compensation based on, achieving a certain list of targets and metrics that they set out at the start of the process. And many times the companies don't achieve those. So the stock compensation will then be, effectively credited back to the accounts. It won't be utilized. But looking at these two numbers here, these numbers, I would say, are, fairly reasonable. We'll have some of the big mining companies come through in terms of market capitalization. So some of I think 3 of the four biggest miners are releasing their results this week. So Marathon Digital, Riot Platforms, Core Scientific, and Bitdeer are also in that group as well. It'd be interesting to see what stock compensation those companies are issuing in comparison to these two here. But bear in mind, if you see stock compensation, yes, sometimes it can be high, but it doesn't necessarily mean all that compensation gets paid out. They have to achieve a number of metrics. And, IREN has certainly got some challenging targets for some of that stock compensation to be issued. And bear in mind, if I'm a shareholder with shares, say an average of $10, and the share price reaches $75, then I'm going to be fairly happy. And I'm probably going to be happy that some of the directors are going to get compensated for them getting the company to achieve that level of share price. So that's another way to look at it as well.
Yeah, I know this is always a sensitive topic for retail investors. And like you say, Anthony, these numbers aren't guaranteed earnings or payouts. The other strategy we've seen some of these companies start to implement is looking at actual salary and dividend payouts as opposed to stock compensation. So maybe a couple notes on that as well.
Yeah, so included in CleanSpark's costs there, that obviously apart from the salaries and the stock compensation, they have a dividend in place for the preference share Series A holders. And at the moment, there's three senior directors in the company hold those shares at equal amounts each. Now, that unrealized gain in the value of Bitcoin, the 260 million, that actually brought their net profits up to 241 million. And in their agreement, they're allowed to have a dividend of 2% of the net income. So that came in at 5.1 million. And that will be paid out this year to those three directors in equal proportions there. So as well as receiving, substantial, salaries and bonuses and stock compensation, we're also seeing, in certain instances now, dividends also being paid. And so maybe, we talked about CleanSpark having a lower stock compensation. Maybe the fact that there's been a 5 million dividend that is payable has been achieved. You could sort of put that on a par with IREN at the 8 million there, what they put in place in terms of stock compensation, albeit there's no guarantee that IREN will receive that 8 million if it's based on metrics that are, a little bit in the distance away there. I also put at the bottom of the table there the free cash flow. So this is effectively, during that 3-month period, operating on a cash perspective, so the income coming through in terms of cash and all their expenses that they're paying out in cash there. Very, very similar amounts, 55.7 million for CleanSpark, 57.9 million for IREN. And there's a couple of other metrics there, enterprise value divided by revenue and enterprise value by adjusted EBITDA for you to have a look at as well. And we'll be doing some bigger comparisons with those when we get more of the other miners coming out in place. But, overall, both are a good set of results, but we just wanted to sort of highlight a couple of things within each income statement just to make sure the retail investors are fully aware of what's going on.
Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now. So now that we've got those introductory slides out of the way, Anthony, on to the main event here. Now, you've put together some really interesting tables or visuals talking about the cost to mine a Bitcoin. And for me, again, as someone without an accounting background, this is a great breakdown to fully understand how much these companies are paying on a per Bitcoin basis and exactly where those dollars are flowing.
Yeah, so for these Bitcoin mining companies, this is the most critical financial metric. Given that the extreme price volatility of the asset class of Bitcoin and the substantial energy consumption required for mining is paramount, and many of these North American miners, they're operating on market rates, which also add a further complexity to cost management, because if you're on market rates, they can change rapidly. In Texas, we've seen market rates change every 15 minutes. So The positive thing is miners can switch off very, very quickly. So when the rates get high, they can switch off quickly. When the rates reduce, get lower, they can mine. And if it's really low, they can mine more. They can overclock miners and benefit that way. In terms of efficiency, we've already talked about IREN having the most efficient fleet. So this really impacts on the cost of a Bitcoin. So achieving 15 joules a terahash and also benefiting from some of the lowest energy costs in the industry. And if we go back to the last quarter, and IREN are one of the few miners who actually update on their monthly operational report the cost of energy. There's two or three miners that do that. IREN have been doing that for a long, long time, giving retail shareholders a real insight to what they're spending. And the good thing is when they do these monthly updates, this should be reflected in their quarter updates. And I can concur that what they were putting in monthly has fed through to show that what they're achieving on a quarterly basis is extremely, extremely positive. So when you look at the cost to mine a Bitcoin, we can take the average revenue they achieve per Bitcoin over that last 3 months. And in terms of CleanSpark, it was $83,448. In terms of IREN, it was $84,249. Now, bear in mind, we've already explained CleanSpark do hodl most of their Bitcoin. They sell a small amount of Bitcoin, and I believe some of the Bitcoin, again, is part of salary compensation for directors. With regards to IREN, they sell their Bitcoin pretty much on a daily basis, so they're able to benefit some days where the price is high and take that benefit there. So, there won't be an exact same amount for each of these. For the sharp eye people saying, well, it's all Bitcoin, they should be at the same price. No, IREN sell on a daily basis, so their average price they received in terms of revenue from a daily basis was slightly higher than CleanSpark, but it shouldn't be too far away because, we can see the Bitcoin price over the last 3 months. In terms of the energy used to mine a Bitcoin, this is where it becomes important now. So we know from CleanSpark's update that they were able to achieve around about 4.6 cents per kilowatt hour compared to IREN, who are operating just a little bit north of 3 cents a kilowatt hour. So that's a significant difference. And that shows straight away when we start to try and look at the actual direct energy cost of a Bitcoin. So in terms of CleanSpark, 38,139. In terms of IREN, only $21,455 of energy used to mine their Bitcoin. That's a massive difference. And that gives each company a gross mining margin in terms of CleanSpark, 56.7%. In terms of IREN, 74.5%. Now, I can think back to 2021, during the peak of the previous bull cycle, when the likes of Hive Digital, who were producing really good margins, and based on that was before a halving and also before all the difficulty, etc., that's been applied over the last few years, and we've seen the global hash rate. They were able to achieve close to, I think, 80% margin on their Bitcoin mining. And we're seeing a miner now, having gone through a halving, having also during that period seen the difficulty and the global hash rate increase, achieving 74.5% margin, which I feel at the moment that's not going to get beaten by any miner. So the fact that IREN was literally the second company to release their results, and we have another probably dozen companies to come out in the next few weeks, I'll be surprised if anybody gets close to 74.5. There'll be some that will reach the 60s. I know that because on our website, we actually have some live information that shows you what the cost to mine a Bitcoin is from an energy perspective, because these companies do highlight their rates, maybe sometimes during podcasts, maybe sometimes in their monthly updates, maybe sometimes in their quarterly updates. So we can put those into a table, and it's calculating all the time based on the Bitcoin price as well. And I looked this morning, and IREN's, based on their energy rate at the moment that they're quoting, was round about 75.5%. So it's very, very close. That last 3 months, they're very close to what the predicted amount should have been. And in terms of CleanSpark, their rate was in the low 60%. So maybe not quite as high as what they were predicting. I mean, again, it's down to, energy costs change on a daily basis, so that can affect these companies, and that small amount there, 3.2 cents compared to 4.6 cents. That's where the difference is in terms of there, because the fleet efficiency is very, very similar, 16.1 to 15. It's going to give it a slight edge to IREN, but it doesn't take account of that near 20% margin difference. The second part we come on into is the operating cost of the organization. What are operating costs? These are all the other costs. You've got to pay staff. You've got to pay some, professional fees, some general administration costs there. So all those other costs. And when we look at the cost of mine of Bitcoin, we're looking predominantly at all the cash costs. So we're not including things like stock compensation or depreciation initially, but we will come on to depreciation and talk about the importance of that there. When you start looking at the operating costs for a company, and we look at CleanSpark there, we know obviously, they had the payroll expenses, professional fees, but we've also included that dividend payment because effectively that's like a salary, an extra salary payment for some of those directors there. So it would be unfair not to include that amount there. If you include the operating costs for each of these companies, it brings their margin down in terms of CleanSpark down to 34.3%, and in terms of IREN down to 52.4%. So all IREN's cash costs taken into account, still giving them a 52.4% margin. Now, if you want to look at the effective cost to mine a Bitcoin, so from a cash perspective, it's costing CleanSpark at the moment $54,797 based on that last quarter. And in terms of IREN, they're able to mine a Bitcoin at $40,000 per Bitcoin. So that's really industry setting at the moment, especially when you think about, hash price, the difficulty. They're still able to achieve a great margin. Now, we talked about depreciation. It's not a cash cost, but believe you me, the companies are using a significant amount of capital to build sites and to install all these latest miners into those sites. And depreciation is a way, really, of showing how that cost is clawed back through the accounts. So what I've done here is I've actually included the depreciation cost per Bitcoin just to show you, if it was to be included, what impact that would have there. So in terms, if you remember that CleanSpark had 66 million of depreciation, look at that in terms of the 1945 Bitcoin they produced. That depreciation per Bitcoin was a little over 34,000. And in the case of IREN, just over 26,000. Now, when you take that cost into consideration to add to their total to mine a Bitcoin, that brings CleanSpark's cost now up to $89,053, which is higher than the actual revenues they were achieving. And in terms of IREN, their total cost to mine a Bitcoin, which includes the depreciation, is $66,904. And when you look at the average revenue, they are still making a healthy margin, even when you take the depreciation into account. And this goes back to the original table that we showed for the income statement. I mean, when you looked at that table there and you saw the $241 million that CleanSpark achieved in the quarter, the majority of that, in fact, all of that was effectively the increased gain in the value of Bitcoin over that period. And that's not a true cash benefit. That's just showing a value of that period there. And you consider where the Bitcoin price is going today, that's already going to erode into the next quarter's period. Really looking under the hood there, IREN actually made a positive net income without any benefit of the FASB rules, whereas CleanSpark, if they hadn't included the FASB rules, they would have made probably an 19 million loss during the period. And that's what sort of like highlights the difference when you start looking a little bit deeper into these companies.
Well, and that's really the million-dollar question with the HODL strategy is how high will Bitcoin go and when or if these companies actually start to sell and convert that Bitcoin into revenue. So a great example there, Anthony. The next table, another visualization of this cash cost to mine a Bitcoin using basically a stacking bar chart to allow you to visualize exactly where these dollars are going.
Yeah, it's a graphical format of what we just explained there, and you can see, from a G&A perspective, actually, IREN's G&A was a little bit higher than CleanSpark in terms of payroll. CleanSpark's was higher than IREN. In fact, it was more than literally double what IREN were paying there, and that takes into account that dividend payment there. Plus, we've already explained they have some, significant salary costs and bonuses included in that amount there. Whereas, IREN have a significant amount of other costs there, but the energy cost, the green block on both of those, that's the biggest cost that a Bitcoin miner has over its life, and you can see that there, $17,000 between the cost for IREN and CleanSpark. And if you're looking at, when a company's mining 1,900 Bitcoin, and that sort of difference per Bitcoin, that makes a real difference. IREN at the moment have got that really under control with the energy price that they're achieving in Texas. Now, again, like the price of Bitcoin, nobody in Texas can tell me what the price of energy is going to be next week or next month. So, with these market rates, you really are the same. And CleanSpark also are probably achieving market rates in their locations in Georgia and the surrounding states that they operate in now. But it has been a great period for miners to adopt that. And we'll have Riot coming on to the channel this week to talk about their numbers. And if you remember, when we talked about Corsicana, which is effectively, one of the largest sites in the world when it's going to be energized. It's a 1 gigawatt site with 400 megawatts already energized. They're using market rates there as opposed to having a PPA agreement. So that's a purchasing price agreement at their Rockdale facility, which for that quarterly period was actually slightly higher than the market rate. But for them, it was like, really using the market rate as to give them a bit of a hedge there. And this certainly this quarter, it will show benefits like it's done for IREN. They've been able to achieve 400 megawatts at that sort of similar level. They won't have received all the ERCOT benefits because some of the ERCOT benefits you have to be up and running for 12 months before you start receiving those. So don't expect Riot's energy to be as low as IREN's energy, but I would imagine that certainly from April this year onwards, they're going to start achieving extremely similar rates because actually they're both operating in Texas. So they'll both be operating at those market rates and benefiting from that cheap energy as we see at the moment.
Yeah, and I recall Jason talking to us about those transmission fee benefits that you get in the second year of operation. So that'll be interesting to see. But fortunately for the miners, specifically in Texas, and particularly now with Trump in office, it seems these market rates on power continuing to improve for the miners as they bring on more and more generation capacity. Now, the final table here, Anthony, a balance sheet extract, some great ratios, numbers on here as well, and giving us some visibility into the total number of shares issued for these companies, which, like hash rate, has grown tremendously over the last few years.
Yeah, I mean, you mentioned shares there. We know that as at the earnings date for both of these companies, CleanSpark had 280 million, nearly 281 million shares in issue, and IREN had nearly 290 million shares in issue. Both of these companies have really utilized the at the market offerings to raise capital over the last few years to grow like both companies have grown. I mean, you know, 3 years ago, IREN were at zero point 0.5 of an exahash. CleanSpark were probably about 2 exahash. So, in the last 3 years, the growth to 31 and 40 exahash respectively hasn't come by chance. They've had to raise significant amounts of funds. Both of them have utilized the ATM. In recent periods, both companies took out convertible notes to also raise more capital to cover their requirements. IREN, obviously, we haven't spoke too much today about what their strategy is, but they're obviously moving far more now into the HPC with this Horizon 1 that they're building out at Childress site as we speak. And then we've got Sweetwater 1, which is a 1.4 gigawatt facility, and Sweetwater 2, which is a further 600 megawatts. That gives them 2 gigawatts of potential power utilized for a HPC client. And, we've seen the likes of Core Scientific have signed up already. They've got 500 megawatts with a deal with CoreWeave. And we've also seen TeraWulf with a 60 megawatt deal with Core 42. And so, with these two contracts in place there, we know there are a number of other contracts imminently about to sign. It wouldn't surprise me if we get announcements from Hut 8 in the next month or so with their potential deal. That was put into the public domain in December by the local community where they're looking to build this facility, and it was explaining about the jobs that it was going to bring and the size of the actual megawatts, including which was well over 400. So that sounds like Hut 8 might have a similar type deal to the likes of Core Scientific. IREN have got a significant amount of power pipeline. Yes, it's not available now. If we look at the Childress site, that has got up to 750 megawatts of power, which they've utilized a great proportion of that towards the self-mining, but they're going to use this 75 megawatts there for HPC, and they're going to energize Sweetwater 1 by April of 2026 and energize Sweetwater 2, I believe, by April 2028. Now, people might say, well, that's quite a while in the distance there. But when you're looking at having deals with these hyperscalers and wanting to sort some serious contracts out, it's not going to happen, in the next week or so like that. There's a planning phase, and so in this next three years, everything can be put into the contract there, and this is what some of these hyperscalers are looking for. They're looking for the ability, but it's in a structured, planned way, and with timelines to achieve everything like that. So, as I say, April next year, so literally just over a year from now, Sweetwater 1, which is a 1.4 gigawatt, that's going to have part energization. And between now and then, if they can land, a significant client, they can go out and build. And if you see what they can build at the Childress site, I believe, Bryce, it was talking about 50 megawatts a month in terms of infrastructure.
Yeah, you're exactly right. 50 megawatts a month, and they were even having hyperscalers that were taken back by that figure. Now, I mentioned earlier in the podcast, Anthony, this X factor for each company. And you just mentioned if and when IREN gets this HPC AI client, that could be a major catalyst for the company, for the industry, and obviously the market valuation of IREN. However, just like we're uncertain on the price of Bitcoin in a day, week, year's time, we're also waiting on this big customer or client announcement from IREN. So a level of uncertainty there. The other aspect I wanted to bring up, Anthony, you mentioned the length of these AI contracts. We saw Weave and Core Scientific come out with a 12-year contract. Also going to be interesting to project what the price of Bitcoin will be in 12 years' time if CleanSpark, for example, were to hold on to that Bitcoin for 10, 12 years, how that compares to the revenue generated by one of these big HPC client contracts.
Yeah, absolutely. And from CleanSpark's perspective, they'll be actually probably quite pleased to see the likes of IREN and Riot and other companies going down the HPC space, because what that means is a lot of power has been deflected towards high performance computing, leaving maybe the global hash rate not to rise as much in the future, and for CleanSpark to grow its percentage of the global hash rate. So at the moment, they've got probably about 4% of the actual global hash rate, maybe a little bit higher, between 4 and 5%. But that could increase if the global hash rate doesn't increase in proportion to what their growth is there. So, it works as a benefit to CleanSpark. Time will tell. One thing IREN did say is if they didn't land a contract with the HPC scale, they could quite easily use a Sweetwater 1 site there for growth in Bitcoin mining as well. So they have the added option of doing that. But they feel fairly comfortable. They've had already a number of discussions. I think there are opportunities to sell Sweetwater 1 for many, many times the amount they've paid and developed into that site there. But they've chosen the decision to go with a, and search or seek a potential client. And I'm sure having that amount of power there, that would appeal to a number of the big hyperscalers. There's not many, actually, there's not many sites at all over 1 gigawatt, never mind 1.4 gigawatts. So that potentially could be one of the biggest hyperscaler sites once it's completed in the world.
Yeah, so some great discussion there, Anthony. Anything else standing out on this balance sheet extract that we should be looking at?
Yeah, there's a couple of ratios. I always do the current ratio because effectively you want these machines. I always do the current ratio because these companies are using a lot of their cash. It's energy driven, biggest cost there, and so you want to make sure that over the next 12 months you have sufficient current assets that can be liquidated into cash to cover any of your current liabilities. And if we look at CleanSpark there, in terms of current assets, they've got $1.2 billion of current assets on the balance sheet, of which just over a billion of that, as at that time, as at the 31st of December, was their Bitcoin hodl. In terms of current liabilities, they're at 97 million. So they've got 12.7 times cover in terms of assets to liabilities. In terms of IREN, they don't have as much cover because their convertible note, for some reason, is held as a current liability at the moment. Now that convertible note isn't due to be converted until the year 2030. So it's not likely to happen in the next 12 months. So they do have sufficient cash flow. They have over $400 million on the balance sheet. And their ratio there says 0.9, which is, it is taken from the account. But bear in mind, their convertible note, which was quite significant, over 400 million, that's also included in there as well. If you look at the market capitalization of both companies, the article was produced on Friday, published on Saturday, so it's like end of last week. Market capitalization has changed significantly today, and we'll come on a little bit towards the end of the podcast as to what's been driving that. But as at the last Friday, CleanSpark had a market cap of 2.8 billion, IREN had 2.7 billion. So these companies, very much on a par in terms of, what the market values them at. And yet, CleanSpark have got effectively 33% more hash rate than IREN. But the market's also looking at the fact that IREN have got these power assets that, yes, they haven't named a contract at the moment, but if they were to name a significant contract for either of their projects, either the Horizon 1, which Horizon 1, I mean, at 75 megawatts, is probably not that much difference in size as to what TeraWulf have announced. And, it doesn't take too many megawatts to start, bringing significant amounts of revenues, margins, and net profit to the organization. IREN have got a massive amount of pipeline to utilize over the next few years. So I think the market are probably pricing in some of that there. So I don't want the sharp-eyed people saying CleanSpark, have got more hash rate. Yes, it's definitely valued in there, and IREN haven't got as much hash rate. Although by the end of June, they'll both be at 50 exahash, and IREN will still be then chasing the HPC deal on top of that. Obviously, from a hodl perspective, CleanSpark, they hodl majority of their coins. They have done over the last couple of years. They were like IREN back in the previous bull cycle. They were selling on a daily basis like IREN. So CleanSpark have really navigated this space really well in terms of getting the benefit when the Bitcoin price has been dropping. They were selling previously as it started to rise. And bear in mind, in December 22, Bitcoin price fell to a low of $15,000 over that last four-year period, and we've seen it grow to $109,000 back in December. So CleanSpark have really ran for that. The Bitcoin price at the moment is coming down, but as at the date of 31st of December, their hodl value there was just over a billion, whereas IREN don't have a hodl value. Net asset value is always a good indicator there. It's basically saying, like, for every every dollar you're investing in the company, how much is that investment based on the assets or the net assets of the company. So if the company was sold off, how much would you be expected to receive? So if you're investing $1 in CleanSpark, that's got an asset value of about 71 cents per dollar. So for every dollar you're investing, 71 cents is actually assets on the balance sheet there. In terms of IREN, it's slightly lower at 44 cents. But as I said earlier, IREN's price at the moment probably includes a scope for high performance computing. And if you look at the ratios or the forward ratios that are used for high performance computing compared to Bitcoin mining, they are massively different. And even at the pessimistic levels, if you look at the likes of, we talked about Core Scientific, you have a deal like Core Scientific, then really, having spoken to some of these Wall Street guys, the big investment bank analysts there, they're giving as a prudent amount 15 times earnings on valuation for HPC, whereas Bitcoin mining is attracting probably 3 to 4 times the earnings value there. So, for every dollar profit you're receiving as a Bitcoin miner, you're not getting as big a market valuation as you would be if that dollar was in HPC terms. It's significantly more, and therefore you can understand that until IREN announced there, that the value is inherent in that IREN share price. But once they do announce something, that will significantly start to increase there. We also look at the enterprise value. As opposed to their hash rates. At the moment, you can see there for CleanSpark, for their current hash rate of 40, it's 55 million per their hash rate. In terms of IREN, 93 million. Now, again, you're looking at a market valuation of IREN and just showing you a proportion of from the Bitcoin mining. And I'd like to think there's a substantial amount of their market capitalization towards HPC. So if you were to do this on a sensible basis, that figure will probably be closer to CleanSpark. From a future perspective, CleanSpark's comes down to $44 million per hash rate. IREN's comes down to 56 million, and that's because IREN at 31 have a bigger jump to 50 than CleanSpark from 40.1 to 50. So that highlights the future and the current hash rate from a perspective there. If you look at the likes of Hive Digital and DMG, you're pretty much looking at single digit numbers per, in terms of million per hash rate. But, you look at the reasons why some of the miners' market capitalizations aren't as high as possible. CleanSpark and IREN and the likes of some of those bigger miners like Bitdeer have benefited in recent months. Hut 8 have also benefited with a sort of like a repricing recently from the market. A lot of these companies are getting, repricing because of some of the things they're going into. So it's an interesting metric to look at there, but don't look at it in isolation. There's so many metrics we talked about today. You'd want to look at them all and rank them all and then make a decision on what you want to do in the future.
Most definitely. Now, you mentioned the current market price of the miners. Unfortunately, under heavy pressure again this morning, starting to rebound a little bit, but both IREN and CleanSpark down in the 2 to 3% range, Anthony, despite the strong earnings metrics and numbers we just went through. So I'll give you a chance to close out, summarize today's podcast, but an excellent under the hood deep dive look into these two behemoths in the Bitcoin mining space.
Yeah, so to talk about, in summary of today's podcast, CleanSpark and IREN are the leaders at the moment in the Bitcoin mining industry. They've demonstrated exceptional growth and performance over the last year. CleanSpark's investments in the renewable energy and infrastructure expansion and their increase in hash rates of 40.1 exahash, while maintaining, cost efficiency, have been extraordinary. IREN's vertical integrated model focuses on the low cost. They've got probably some of the lowest amount of energy of all the miners, which is renewable as well, and propelled their hash rate to 31 exahash, which has showcased their commitment to operational excellence. And we've always spoke about the quality of some of these facilities that IREN are putting up there. They're not putting up, tin containers. They're putting up proper facilities, and some of these facilities now that IREN have, they're also utilizing HPC within the same facility as Bitcoin miners. That's how good some of their facilities are. Both companies have reported really good financial results, driven by the high production in Bitcoin and both improving their margins. CleanSpark has a very, very strong balance sheet. IREN's expansion into AI and HPC also positions itself for its future growth and predictability when it comes to revenues, margins, and net profit. The both companies, have got financial stability at the moment. Their approaches to liquidity and capital management do differ. CleanSpark do hold that substantial Bitcoin hodl, where IREN, regularly sell their Bitcoin on a day-to-day periods. But they've both got, strong balance sheets with conservative leverage ratios, and they're positioned for sustained growth in the ever evolving Bitcoin mining landscape.
So there you have it, you guys. No clear winner. Both great companies to invest in the Bitcoin mining space. And as mentioned, both core holds in our portfolio, Anthony. So you let us know in the comment section below, which of these two companies do you think is in a better position heading into 2025? Which is your favorite and why? And with that being said, you guys, thanks so much for watching today. Hit the like button. Feel free to subscribe, and we'll see you back here tomorrow with Jason for Riot Q4 earnings.